We have Ravleen Sethi, who's joining us from CareEdge to talk more about this space. Ravleen, afternoon. Thank you so much for your time. First of all, what are your thoughts on the way financial health of some of these cement companies are right now? I would like to analyze it more objectively, not from the stock market point of view, but the factors which are at play. This space has been under pressure on realizations because of overcapacities. Are things reversing now, or things are looking better?
Sure. Thank you so much for having me over here. As far as the financial health of cement companies, is related. Cement companies, if you just go back, I mean, from a realization perspective, will just come over in some time. But financial health of the sector has really improved. If we actually go 2, 3 years back, so 20 and 21 were two very good years for the cement industry, and players, have deleveraged quite a bit. In fact, the top 3, 4 players that we talk about are on a net debt positive. So from that perspective, they're not carrying, they're not leveraged. So financial health wise, the last 2 to 3 years have been great. 23 was, yes, a year where the industry faced a lot of cost pressures and profitability of the sector came down. And 24, consequently, it did improve with fuel prices coming down. But yes, the improvement has not been equivalent to what 2021 registered. Now, cement prices, yes, they have been under pressure. And largely the price elusiveness, what we believe is here to stay also in medium term. Largely it is because what we were expecting, that demand is going to soften, this being the pre-election, the demand generally softens in a pre-election period. And we did see, that April and May demand was not very great. So demand did soften, though in June there are signs that demand is kind of picking up. But then again, we'll be heading to a monsoon season when probably the demand was again going to be moderate. So we don't see cement prices kind of growing in 24 at all. In fact, in 23 Q4 also, we saw a lot of players have registered a degrowth in their realizations. So considering 24, will be a period where the industry demand may soften from the earlier highs, what they used to report, maybe an 8 to 9% cement industry was growing in last 2 years. And we are only seeing a cement industry may register a growth of close to 5 to 6%. So considering this and also the heightened competition, amongst the players to maximize the volumes and the market shares, we see that prices would not improve in FY25. They might remain to what 24 exit prices were, or marginally even decline by 2% to 3%, depending on which region are the players selling.
I've always wondered why cement prices have remained. I'm actually looking at the data that cement prices have remained almost the same, 5% give or take, for more than 10 years.
Correct.
And even now, because the government is kind of uncomfortable if cement prices start rising, their projects, get expensive and etc. It has a common man angle to it. Over the next 5 years, do you see purely because the demand picking up, the demand supply or overcapacity to get adjusted? What is a strong investment case in cement anyways, if I look beyond 2 to 3 years? Is there one?
So you're asking from the realization perspective,
Yes.
that would they grow
Yes.
beyond 2 to 3 years?
Yeah.
Okay. So cement demand, I mean, for the next 2 years, it might, we don't see the realizations also would kind of increase in 25, like I said, and 26 also there may be a marginal increase. But what we see is, the cost curve is kind of changing. The cement players, in FY29 and 30, the MMDR Act, which was there, which would come in play. And players will have to increase their prices if they have to, assume that additional cost which is coming onto the books. But from an EBITDA per ton perspective, you're very much right. I mean, cement players have been making close to, I mean, if I talk about the top 4, 5 players, they've been making close to 900 to 1,000 per ton on an average. And we see that realizations would continue for the next 2 to 3 years as well. I mean, what players they generally do is, they start, so cement, obviously it's a long gestation period. So whenever close to the elections, what happens is that the industry grows at a good space, because of a lot of infra projects and stuff, and players start announcing capacities. And it takes a good chunk of time for the capacities to come on board. So, we'll always see these periods, when probably there would be some kind of a slowdown and capacity utilization would kind of, plateau out. And then obviously in the pre-election period, generally the utilization levels of them go up. But here, what I would say is, the consolidation is one thing which is playing. So the big players are kind of getting bigger, and they are getting more, the realizations are also getting stronger if we see from a couple of the top players, how we see. So from that perspective, I think the consolidation is one thing which will change the game for a few of the cement players. But realization perspective, it may remain muted for the next 2 to 3 years as well.
All right, Ravleen, we'll let you go on that one. Thanks so much for joining us this.
If you like this video, then like, share and subscribe to ET Now.